Excellent. Yeah. More merch in the hot box. Super excited for that. Now, 95%, according to our reports at Solana Floor, of the total on-chain tokenized equity trading volume for a while was on Solana.
Right.
And Remora has been a big part of that. Grew to, I think, over 10,000 active wallets, $20 million of trade volume in a very, very short period of time. What's going on? Why is it all happening on Solana?
Well, Solana's, I mean, it makes sense as a place to trade a lot of these assets, right? Like, we don't want to relive what we've done for the last 3 years where it's like, oh, yeah, let me trade it on Ethereum or a roll-up of some description. Then the liquidity gets siloed and then it just stays sort of stagnant. You can't really build on it. And you just hope that everyone adopts that roll-up. There's like 5,000 billion of them. So I think Solana just being the one place that is fast and cheap, again, it's like with most tokens, right? Why do people launch 1,000 of these tokens a second or whatever it is, in meme season? Like, it's because it's easy and fast and cheap, and that's where people want to trade. So makes sense there. I think on the wallet landscape as well also makes sense. The wallets have been growing quite a lot over the last few years. They have like millions of daily active users. So yeah, look, if you want to launch somewhere where the people are at, like, you should probably be on Solana. So I think on the tokenized equity side, also I would probably say Solana has these extensions to Token 22 is a specific token extension designed for RWAs. So it has a couple of different things that might be interesting. Has a thing called Scaled UI, which helps with stock splits and stuff like that. And it has a bunch of other compliancy type mechanisms like built into the actual protocol of the underlying token. So that helps more than just an SPL token or, ERC20 or something like that. It's like a different, I guess you'd call it a token standard. So I think that's pretty appealing to RWA issuers. And yeah, I would say put all of that together, put it in a big pot, stew it up, and that's what you get. You get everyone using Solana.
Everyone using Solana. And also, I think part of the reason why the sort of retail participants on Solana have been so keen to try this out is that there's constant iteration. Started with 5 on-chain equities. But there's a recent flash trade integration I think that people are very, very excited about. Talk to me about that leverage option that people can now have up to 10x leverage with their on-chain stocks.
10x leverage on Flash, on the new Flash pools, which is super exciting. So yeah, we're starting with the assets which people want to use. So it's usually like the top 5 tech stocks.
Yep.
And then we're going to be expanding it from there. But right now, we have all of these stocks in a pool. On flash trades, you can take leverage on them, but also how it works with a lot of these things, how a lot of the flash perps work is all of the assets in the pool, the actual LP token becomes a token itself. And it's more of an index of all of the assets.
It's a fantastic product.
Right. Like I guess JLP pioneered this, right? Yeah. People familiar with JLP did really well over the last, whatever it is, 12 months. Similar kind of concept, but with stocks. So it's like you have an index of all the things in the pool, and it earns an APY. I think last I checked, it was 14% or something like that. So 14% on a stock index with pretty good weightings, like that's a compelling product.
That's not something you could find anywhere else. That's like an innovative product.
Right.
That's unique.
And then we had the loop scale integration recently as well, where you can loop that token. So you can essentially borrow USDC, leverage the actual token itself. That 14% APY, maybe you can jack it up with some leverage.
And that's a safer form of looping than looping like a meme coin.
Right.
Right. Like there's some weight behind that. So people can feel a little bit safer if they want to degen.
I mean, that is the proposition. It's like, this is an index. It is not, going to nuke 90% tomorrow, you'd hope. Like, otherwise, there's bigger problems as well. Like, it has to nuke 90%. Yeah, if the S&P 500 nukes 90%, then, problems are abound. Like,
going to happen.
Yeah.
So looping, leverage, amazing. But a lot of traders online, I've seen, specifically on crypto Twitter, call the ARB opportunity also quite enticing. Some people even called it free money, because of the price difference between the on-chain stocks and sometimes the stock market prices, if you will, in your boomer brokerages like Robinhood or wherever you might have traded in the past. Sometimes that difference can be between 4 to 5%. Sometimes it spikes up to 10% from what I understand.
Yeah.
People call it free money, so that's pretty exciting.
Yeah. So arbitrage, I guess in this context with RWA tokens, it's still kind of a newish kind of thing, because you have the price of these things on chain, and then you have the price of these things in reality. And by reality, I mean trading on the NASDAQ or something during New York hours. So there's always going to be some sort of price differential there, right? Like the on-chain, you hope, mirrors, the real reality of the world, but it only mirrors that if people actually take action and do something, right? Because these tokens are in AMM pools. They're sitting there just like any other token. So what makes a token go up and down? If people buy or sell it. Now, why would you buy or sell it? It's because you can make that arbitrage opportunity. So for example, in the real world, Tesla goes up 10%. How is that going to be mirrored on chain, right? Obviously, you would want the on-chain token to go up 10%. Now, a lot of people, or in the RWA ecosystem, they'll pay market makers to do that. What does that really mean, though? It means it's a guy who just buys the tokens, or rugs some tokens from the AMM pool up to that pricing, so that now the new price adjusts, something like that. So they're running trading bots and these kind of things. However, with Remora, we want people to be engaged and do that themselves. There's opportunities there. We've been talking about it. So the people can be the market maker. That's
super exciting.
So yeah, if you see an opportunity of 10%, yeah, absolutely. Go ahead and take it.
Yeah. So we're gonna have Pith on later today. Yeah. So they're dealing with the oracles on this. Like how do you deal with the price? Like are they pulling in an oracle from somewhere else outside trading hours? Or what does that look like?
Yeah, so, I mean, we should also close the door, because it's pretty loud in here. Yeah.
These things won't pick up too much of the sound in the background.
Yeah, but no, so
it's getting loud out there. What do we have? JP Morgan and Nick Ducott. I do want to ask you about these time.
Yeah.
Let's talk about...
there's like a million things going on outside. People can't hear it, but it's like...
Day 3. They said it was going to be a big day.
I know.
I mean, usually people chill out on day 3.
Not here.
There's no chilling out going on.
Every 5 minutes, people are going wild. JP Morgan and Nick Ducott now.
So we were talking about Pith feeds, right? Yeah. So one of the cool things with the Flash pool is that you can actually execute trades at the NASDAQ price.
And directly at that price.
Right. Yeah. So that was one of the problems, right? Is that usually with these RWAs, it's like there's the real world price and then there's the price on chain.
Yeah.
But in this case, with the Flash pool, trades execute at that Pith feed price from the NASDAQ. So there's some arbitrage stuff that you can do there as well.
Yeah.
But also I think that creates an outlet for people who want to be able to engage with these tokens, but perhaps don't want to pay the quote like implied slippage or something from the on-chain world. So I think that's also pretty interesting. But because that pool is executing trades at this NASDAQ price, it's always going to be like the correct price. Right?
So that's going to be like almost like the source of truth.
Right.
That's the source should be.
That's the source of truth. And then that means that pool will attract like implicit arbitrage, because from outside of that pool, you have all of the tokens that are trading in whatever other AMM.
Yeah.
But of course, if one is, 5% higher than the other because Elon made a tweet and everything's pumping or whatever, there's going to be a difference there which people can exploit. So you buy one over here and then you sell it over there and then you make the money. So
if I'm trying to do that, actually, sorry.
Yeah, go for it.
So, okay, so I'm seeing, I'm seeing on chain that the price is up 5%. I'm looking at my traditional IRA account and Tesla had not changed in price. Am I buying that? Or what's the proper way to do that? Like,
explain that to the other way around, maybe, right? If the the on-chain price is
like arbitrage. I'm not arbitrage.
Well, not yet. Whenever there is a difference, there is an opportunity.
Yeah. And so both ways.
In both ways, right? Like you can either sell one or you can buy one, right? So whenever there's a difference, there's an opportunity. That's the key thing to keep in mind. And the cool thing is that Flash pool, because it's the first of its kind, executing trades at a NASDAQ price, it's always going to attract that liquidity of people doing that arbitrage, which means that LP token we were talking about earlier that has that, yield associated with it, is going to continue to attract yield. So that's very positive for LPs in the pool. So yeah, we're really excited for seeing this new product. And yeah, Flash, hey, we got more stuff coming.
Yeah, it's a good setup. Like that's a good start for integrating this onto that platform. So it's like, all right, this is working. Like what else is coming? Are you going to be putting more tokens, more stocks on?
What else is coming? So we had Warbucks on yesterday, and I don't know if he was supposed to say this or if this slipped out. I think he might be. Oh, no, he said, "Look, the way
bro loves to talk."
I know bro talks, and I really drilled him on this, and he sort of tightened up. But he was saying a lot of these on-chain stock providers have the word stock or stocks in their names, and that sort of limits them. I was like, well, what are you suggesting that there'll be other RWAs that I can leverage long and arb? And he's like, well, maybe I shouldn't say that. So is that the direction that we're going in?
That is the plan, yeah. Okay. So we're not going to have these 5, tech stocks forever. We want to be that tokenizing company that works with other key members like Flash. And basically, if there is demand for something, we'll tokenize it and get it on chain. So that might be the commodities. Is a really good one. So remember when FTX had like lumber and stuff like that, and gold, silver. Obviously, it's the trade of the last year.
Absolutely.
So there might be wheat. There's a lot of like commodities that are traded, which we think are pretty interesting. Maybe that's a separate bucket, right? Maybe that's only some investors will be interested in that. But we think that look, it could be additional equities. It could be commodities. It could be some of those cool things like, MSTR has all of these different bonds, which they now do. And some of them are like 10% APY. And that's where Saylor gets the money to go and buy crypto. Like, okay, cool. Like maybe it's something like that. That could be a compelling proposition. But what we really want to know is where the demand's at.
And would we theoretically be able to leverage long wheat, for example, lumber or something?
That is the plan.
Yeah?
Yeah.
That's the
eggs. Remember when Trump was like eggs were like down 90%?
Yeah, it's got to be eggs.
We're going to do eggs.
It's lots of good memes there. But I think the reason why I'm super excited about all of this is because typically, and this has been the case for the last 3-4 cycles, you probably know longer than I can, but people would off-ramp all of their funds or a large chunk of their funds and they'd put it into some traditional boomer brokerage account. Maybe just keep it there in cash.
Ew, that sounds horrible.
I know. And then they might buy the S&P 500 in, I don't know, trading 212 if you're paying eToro or Robinhood, heaven forbid, So now I feel like people have the opportunity to not only keep their funds on chain, but to actually use them actively. And maybe do some exciting degen stuff like leverage long, 10x Tesla, but also yield on some of these assets.
Right. I think that's the compelling thing is if it's earning yield, if it's borrowing against it in a DeFi lender, if it's, doing whatever, all of the other different cool things, people will make options for it on chain at some stage. But that is the cool thing. Make it composable, make it something that, people can, well, we use the word utility quite a lot in crypto, right? I don't know if utility is the right word, but it kind of is, it is giving
people to do things,
do stuff. Right. Yeah, exactly. So it's like being able to do stuff, with the tokens. So that is one of our core goals. That's what we want to do at Remora. That's what we have the experience in. That's what we're good at. So I think doing on-chain stuff, wrapping, tokenizing, getting yield opportunities, working with DeFi apps. That's what we really want to focus on.
And what kind of partnerships does that require? So Flash Trade is obviously a huge partner to have in this arena. If you're looking to do sort of, I guess for us, crypto natives and degens, wheat, eggs, these are sort of niche assets, but for the rest of the world, crypto is the niche. So who do you need to partner with to make that a reality?
I think for the most part, we need to work with DeFi protocols, number one, to provide interesting things which people can actually do with their tokens that benefit the user above and beyond just going to a brokerage account. Like if we're the same as a brokerage account, but it's like, oh, you can buy a token and it's in your wallet instead of your brokerage account, that kind of sucks. It's not as good. So I think number one, we need to work with the DeFi lenders. Number two, in the background, Remora works with brokers in order to ensure that we're able to custody these things and they're the custody party for this. So we need to work with them to see what we can actually tokenize and utilize. That all happens in the back end. As far as people concerned, it's a token. They're able to redeem it. I think the redemption process is an important part. That's what we're working on. We're going to have some new product updates there on that whole redemption process, which should work regardless of liquidity, which is going to be another first. Because usually
redeeming tokens for the direct stock, like
ideally, the ideal world is that you want to buy $1 million of wheat. You can buy $1 million of wheat token, and then you can redeem $1 million of wheat token for USDC. And you're able to do that.
Say for wheat, I was like, I don't want to deliver to my house.
No, just the token. That's right. Just for USDC. That is the goal, right? And usually when you're doing that as an issuer, you either work with market makers to be the people that are minting and redeeming, or you are trying to build that liquidity depth in those pools so that people can trade it at a reasonable price all the time. But that's often not the case. So yeah, we want to build the tools for people to be able to do that, and that's something that we're working on with this OTC product. Essentially, being able to swap the tokens at the NASDAQ price in size. And that would be
the opposite way. What about taking like, hey, I've got some stocks that's sitting in my traditional account. It sucks. Like, I want to bring these on chain. Can we do that?
Sell them, get rid of them.
Yeah, sell
Get the USDC and then bring them on chain. Yeah. No, it's really difficult to do the portability aspect of, between brokers, between say individual accounts or anything like that. So I think there still is, like, there's the crypto world and there's, the real world. Yeah. But I do think that this crypto world of stocks, that's going to continue to grow. Yeah. We're going to see that. It's going to be a big vertical over the next couple of years, regardless of if it's a bull market or a bear market, which I think is another cool thing. Yeah. I mean, a lot of people don't talk about that enough, but whether it is a bear market, people will be swapping into S&P, and I still expect the TBL to go up because it's an uncorrelated asset. And often what's happened previously in bear cycles has been that the stocks have often gone up and then crypto's got wrecked. And then people sort of, scratch their heads for 2 years and they go, why is crypto wrecked? And then crypto takes off again. But now you have exposure. Yeah, you have exposure to the traditional market. So
hedge your meme coins with stocks.
That's it.
That's the way to do it.
And do cool stuff with it, right?
Yeah.
I think the proposition is not just that it's a stock on chain. It's you can do cool stuff with it and better stuff. Yeah. That make it a compelling value proposition.
Yeah. Yeah. Well, and it's like, you're giving this to everybody. Everybody can access this, right? It's no longer siloed. It's no longer tons of paperwork to get it.
Yeah, what's easier? Like, just open your wallet and press a few buttons and a swap. Like, that is literally the easiest experience. If you were to design an optimal experience for like anything on chain, it would be that. Yeah, it would be, I open my phone and within 2 seconds, I'm able to get the thing which I want. So
yeah, we have to address the elephant in the room because you said bear market. It's a big ooh. Where are we in the cycle? So the reason why I think this is really important to address is you go on crypto Twitter, it's shambles. Sentiment is at extreme fear. It's not looking good. Yeah. You talk to the institutions, they're like, everything is great. We're going to the moon. It seems we've sort of had a role reversal of bullishness and bearishness. And then even weirder is you come here to Breakpoint and everyone's like, everything is great. We're building, we're shipping. Price doesn't really matter. Price is like such a 2024 discussion. So where are we?
I mean, people, if the price is number going up, people will talk about the price. Yeah. If the number is not going up, then they won't.
That's true. Yeah.
But look, I think what are the fundamentals of it? Fundamentals is kind of memed on, but the fundamentals, at least here, you've got people every day coming in and making some big announcement. And wasn't it like someone was saying trillions? Some $1 trillion asset manager yesterday was announcing stuff. Franklin Templeton.
Franklin Templeton was here. Mike Reedus. By the way, he's totally Jen, it turns out.
There we go.
The seeker and a CUDA string, and awesome. Pleasantly surprised by Mike.
Love that. Yeah, love that. So I think it's things like that. So you get a mix of sentiment, don't you? You get all of these things which point to it being very interesting and bullish, and hey, people should care about crypto. And then the reality is, number down. Maybe there's a time lag to that. In these cycles, but certainly in crypto Twitter at the moment, I think crypto Twitter, like what was our cycle this year? Like, was it wasn't really memes. It wasn't really anything else.
It was chop.
It was kind of chopping. Yeah. So I don't think it was any one strong thing. Like maybe the app narrative, right? Like we had the emergence of things like Pump Fund and other stuff, right? And then wasn't there that screenshot the other day with the top crypto protocols? Or no, it was companies that got to 100 million in feedback or something in revenue. Yeah. And it was just all right. And it was all crypto companies.
It was all companies.
So it's like maybe we're entering the age of, instead of just, buying, gold coin Inu 69, we're actually going to buy apps that do real stuff and generate money. Now, whatever people think about Pump Fund, they are making money and they are a company which makes money. So
huge amounts of it as well.
Yeah. So that's actually a good thing. And the more of that we see, the better. So as far as I'm concerned, like, it really just matters that continues to be a thing, whether it's a bull market or a bear market or whatever it is. You're probably going to see more of that. Maybe that's the new meta. The new meta is companies making money. Wow, who would have
What are
thought?
the odds? Yeah,
Wow.
Hashim has a very similar thesis. It's you know, stop focusing on these 5-year roadmaps and focus on who's making revenue, why are they making revenues in a sustainable revenue model,
Right.
And that's probably the company that's going to get not only used but funded further even.
The problem is that doesn't generate the traction that people want, because it's like, but how do I make the money?
Right.
So
Everyone wants a piece of the pie.
right. If it's like buy a dog coin, everyone's like, oh, I know how to make the money on that because I buy the dog coin too. Whereas if it's like, hey, these other people over there doing a great job and they're making a ton of money, it's like, yeah, that's not really going to get the traction, right? So, look, maybe sentiment will have to readjust. Maybe people will need to readjust where they're at in crypto. I'm sure that the dumb days of just buying coins will come back. Certain, it always does. I always count it out.
I cannot wait.
I'm like, this is the last time, but then I'm wrong every single time. So,
Absolutely. Okay, we could have this conversation all day. We could talk about TradFi institutions coming on. We could talk about DACOs, whether or not they pose systemic risk. These are some of the more exciting questions we've been asking people. But we want to end on an extremely bullish note.
Okay.
So revenues great, on-chain equities great, 95% of all the volume being on Solana is great. But what's the single most exciting development that we're looking forward to in Solana land in 2026?
Ooh, most exciting development in Solana land. I think some of the stuff like what Austin's doing with 00, some of there's sort of the back end infrastructure stuff, because it doesn't get the praise that it needs, but really when we're talking about getting all of these guys and getting, you know, trillions of equities on chain and all that sort of stuff, you actually need the infrastructure, and it needs to not be a load of nonsense. Like a lot of people will say infrastructure and make up some BS, but it's actually, we need the real stuff. And I think building literal validator networks that are, you know, untethered to the normal internet.
Yeah.
I mean, that's like as deep as you can go on this. So
It's exciting to talk to him. About that too.
yeah. So I would say, validator infrastructure stuff and apps that make money.
Yeah.
You heard it here first. The foundations matter a lot, and making revenue obviously matters a lot. And there's a lot of that in Solana land as well. George, unfortunately, we don't have any more time to talk. We have too many guests. 5 minutes.
They're queuing up. I can see them
queuing up to get into this extremely hot booth. Thank you so much.
Thank you so much.
Chat to us
Awesome,
today
George.
on Solana Floor.
Thank you.
Ladies and gentlemen, George Harrap, Remora